Tariffs, are they as big a distraction as I think they are? The answer to that, in my opinion, is yes. One huge distraction. Politics. Who the fuck is running this country anyways? And let's talk about the real canary in the coal mine. Investors need to pay attention, JG.
Ladies and gentlemen, it's going to be a spicy episode. Welcome to episode number 61. It's going to be a good one.
Hey, and by the way, this is just a perfect time to remind people to hit the like button, to subscribe, to comment. Let us know what they like, what they don't like. Let's get the algorithms fired up.
So, Patrick, I think we got to just ask the question, man. Is there any good news out there in the world right now? I mean, investors are just melting down. And even I, the most positive guy in the world, am searching for good news to bring to the show. And I'm not sure I have any, Patrick.
I don't think there is any good news, but having said that, I think it depends on what feed you're in. You know, whether you're on X or you're on Instagram or YouTube, you know, whatever your feed is, those algorithms are going to feed you whatever you got going on. Because I'm always doing economic research. I seriously, I don't get anything but bad news.
Yeah, I did. Now, I wanted to get your take on this, Patrick. It was, I think, last week or the week before, there was a big RBC economist, the economist for RBC, that did an update on tariffs and so on and so forth. I haven't got to listen to it yet because I've been dealing with this ice storm. But I sent it to you. Did you get to listen to it, or you haven't got there yet?
I didn't. I saw one that you sent me from a Bloomberg. Was that the RBC guy?
No, the RBC guy was before that.
Oh, okay. No, I didn't see it.
Yeah, gotcha. So I was curious to see what their takes are, and because no doubt tariffs right now is dominating the conversation. I seriously cannot go anywhere without hearing about these darn tariffs. I mean, they're just everywhere. And even if you don't consume the news, because I don't consume any news, like literally when I'm driving into work in the morning, the news on the radio comes on, and I always mute it. I don't listen to any news. Zero news in my life. But it still dominates everyone's conversation nowadays. It doesn't matter who you're talking to. It doesn't matter what you're talking about. It seems it's always come back to tariffs and how terrible this is going to be for everybody.
Well, listen, I think first and foremost is that so much rhetoric, and, officially as we're recording this, tariffs are going to kick in, some conversation around it. I'm not going to be surprised at all if Trump backs off. He, soft sells a bunch of stuff. And so there's always been a lot of tariffs in place. So all of a sudden people are getting some form of education into what has already been happening in the tariff world. Many didn't realize that Canada has a lot of tariffs on the US, and all Trump is doing is pushing back. All to say this, all of these conversation around tariffs, and I don't care if it's the politicians beaking off about it, it's all nothing until final decisions are made. And many are reacting. There are things that are being put in place that we're not even privy to, like they're not being listed. But I think ultimately the dust is going to settle. It's going to take some time. But think about it, JG. If Canada's putting 100 or 500% tariff on some good, and the US pushes back and says, well, we're going to match those tariffs, they're ultimately going to negate each other. And guess what? At some point, some bureaucrat's going to sit across from another bureaucrat, US, Canada, and go, why don't we just drop these tariffs completely? We go square. So all I'm saying is I don't want to call it a nothing burger, but man, oh man, people are just caught up in the hype and the drama and the bullshit. And it makes no sense. Like, just relax. It's also Trump's way of being. It's part of his negotiating tactic. So that's all my kind of.
But I think you're right, Patrick. I think that there's an element of this, and I think it's tariffs is the current topic of the day, if you will. But whether it's the tariffs, whether it's the geopolitical stuff, whether it's COVID before that, doesn't matter what the case is. The point is that it seems like people just are getting on these bandwagons with much more fervor and much more craziness than ever before. And I think social media has a lot to do. I think the fact that everyone has access to everything, everyone has an opinion on everything nowadays. I was listening to one guy the other day. He said, remember the days when we didn't tell people who we voted for because it was like your own decision and you just didn't talk about that? Wow, where did those days go? Now it's like everyone's got their opinions on social and everyone's saying stuff. And it's like, and I mean, I get it. That's what social media is all about, is expressing yourself. And I mean, I understand that element of it, but it's amazing how people think, oh, I'm just expressing, I'm just putting it out, but they're also consuming, and that consumption is fueling them for most people in a negative way because they get themselves all amped up and all. And at the end of the day, you only have one choice to make, and you should make your own choice, and that's that. But the cards are going to go where the cards go.
Well, I think there's a couple of things around it. So first off, I don't want to minimize and or negate that some businesses are really at the effect of what is going on. But ultimately, a lot of it is a self-fulfilling prophecy. They've got a lot of momentum. People don't even know what the hell they're talking about. Many don't even understand the concept of it, but they're just pissed off at the US. I mean, how freaking ridiculous is it that you're going to boo a national anthem, that you're going to key Tesla vehicles? I mean, it's just beyond ridiculous of what's happening. But here's the thing about it. We've got a couple of charts, and this becomes a self-fulfilling prophecy. Look at business confidence and look at consumer confidence. I mean, record lows, JG. I mean, business confidence is lower than when we were shut down for 2 years through COVID. How ridiculous has it gotten? Now, here's the thing about it, and let me just go off on a bit of a tangent for a moment, is that what we're seeing in this, consumer confidence, first and foremost, we collectively have beat this drum to death, which is that Canada is a non-productive country. Consumerism is a huge part of it. Now what's happening is consumers are freaked out. They're nervous. They're not spending money, which is going to slow the economy down. Then there is the tariff drama and the rhetoric and what is real, what's not. Most of it nobody can control anyways. But having said that, businesses are in a tough spot to make really important decisions like, do I buy more inventory? Oh, consumers aren't buying. I'm not going to bring more inventory in. Oh, I'm not going to hire anybody. I'm not going to go to the bank for a loan because interest rates are too high to expand on my small manufacturing business, or whatever it may be. The whole point of it is that consumer confidence, business confidence, record lows. Are we going into a recession? Yes, we are. But this will drive it, and we're not going to feel it for probably another 90 days, JG. The lag effect, you and I know that one well. And so in about 90 days, I'm guessing, I'm kind of just guesstimating, is we're really going to feel the impact of all of this. But here's the thing. It's all a lot of drama with no definitives being hit or stated by either Trump or Canada. So we'll find out over the next week or two what's real and what's not.
Well, I still don't think we're going to find over the next week or two, because that's just the beginning. We're really going to find out after the new government gets elected, at the end of the month, and then they're going to enter new negotiations, because this government is only doing as much as they they're doing what they're doing. Whether that's right or wrong, the point is that we're going to have a new government at the end of the month, and then I think the negotiations get opened back up again, and then we're going to find out. So really, we got six, and I said this in the last episode, Patrick. I said to people, it's going to be tumultuous as hell for 90 days. I said that. I think I said 80 or 90 days, which is exactly what it's going to be. So it's going to be a couple more months of craziness. There's no doubt about it. So people have to strap in and get ready.
Well, 100%. And, you make a good point, is that, and that's another issue though, right? Here we are, a country with, do we have a government? Okay, well, we've got a non-elected prime minister making frickin' decisions and on a platform that is disconnected from what is happening in Canada. Why is this platform around a climate crisis, climate change, when we've got an economy that's melting down, when we don't have productivity, when we've got so many other key issues? His whole platform is, okay, we're going green. We're going to save the planet from itself because, we're putting in these carbon changes. They pull off carbon tax, they'll pass it on to the business, it'll get passed on to the consumer. Again,
it won't be any different.
It won't be any different. And so ultimately, to your point, we're going to go through, I can't help, some would argue we're already in a recession, and it depends where you are in the scale of life. So are you, service sector, lower income, you're getting hammered, middle income getting hammered. So unless you're, really in that upper 5 percentile, you're not feeling good about what's going on. And even the high net worth individuals are going, okay, we got to slow this train down. And some of them are just saying, I'm going to sit in cash because when this train wrecks, I'm going in, and that's what they're waiting.
Yeah, it was Kathy Wood who talked about how we've kind of been going through, and she was obviously referring to the U.S., but I think Canada suffered from it too. She calls it a rolling recession, where it's essentially, it's since post COVID, it's going through each individual sector at its own rate in its own time, unlike the entire economy going. And listen, if you're in the real estate business, like if you're in the construction business, if you're in the construction business where you're typically building subdivisions and you've been booming from 2010 to 2023, let me tell you, you're going to say, "Oh no, we're in a recession. We've been in a recession for 18 months." You're going to say, so it really depends where you are, like you said, Patrick, which part of the economy you're working in, and which and how it affects you. That stuff is all going to reverberate at different speeds for different people. But I want to come back to something you said, which I think is so critical. You talked about how this is a self-fulfilling prophecy, and I couldn't agree with you more. And if anyone's listening to this, I think that's the one thing people need to get out of this, Patrick, is, in 2008, I took a course which was one of the best courses I've ever taken. And it was a course called Create Your Own Economy. And it was essentially just talking about exactly what you're talking about, which is this stuff becomes a self-fulfilling prophecy. If you start getting into this negative mindset, and this isn't about being, just being positive. It has nothing to do with that. But the point is you get more of what you consume. And if all you're consuming is negative crap day to day, day in, day out, all you're going to see is more negative crap. And that just continues to spiral in that direction. I could tell you that that's not what you're doing, Patrick. That's not what I'm doing. That's not what the best investors in the world are doing. That's not what your wife, Stephanie Hanlon's doing, an Olympic coach. We're not consuming this negative crap. We get educated. Yes. We have to make decisions. Yes. But then we quickly switch the channel, so to speak, and get on the right board. So this is the time to lean into those kinds of things where you can create your own economy, because the opportunities will be there more than ever. And I feel like a broken record. I've been saying that for a while now, many months. But it's true, the opportunities are there, but you got to have your eyes open for them.
100%. There's something around all of this. First and foremost is that we have to look at what's going on economically. When we talk about real estate and we talk about the opportunities of investing in real estate, we have to look at why. Right now, when I talk to many realtors, when I talk to mortgage brokers, when I talk to individuals who are in the industry overall, their real estate investor business, those individuals coming in to grow a portfolio, is down 90%, some of them are saying. And actually, a couple of them they've gone off the rails in terms of they're not even paying attention to investors. There are no investors to pay attention to. We see it within the real estate investment network. We see it within the trusted partners that are there saying, gosh, nobody's looking at investing in real estate, of course, unless you're in Alberta. We can get to that conversation in a minute. Here's the thing about it, is we look at all of the news that's coming at us, and ultimately we have to create some thesis, because we're not only talking about how do we take and where are the opportunities within the chaos, but then we also have to say, okay, well, we are wanting to make money, but we're also wanting to preserve wealth. So when we look at what the economic conditions are, we have to make decisions based on that. We've got a stock exchange that, for the most part, depending on, the big seven are melting down, or whatever they're called, the Mag 7, they're coming off the rails. The stock market in general, the Dow, S&P, NASDAQ are all down, very volatile. So ultimately, and I shine a light on this all the time because it's an indicator. It is the canary in the coal mine, and that is gold. So when we look at gold hitting all-time highs, and I believe silver is going to follow, why is that an issue? Because gold is a safe haven. It really is considered money. So when we look at the high net worth investors, when we look at what central banks are doing, it hasn't even got into the retail world yet, by the way, JG. Like, the public isn't even aware of what's happening in the precious metal sector. Now, the significance of this and the importance of this is that is what's happening on a global macroeconomic scale. All central banks around the world are loading up in gold, on gold, except for Canada, by the way, no surprise. But ultimately, that is the flight to safety. Now, having said all of that, we're also seeing high net worth individuals get into the real estate world. And we've been talking about this for at least, I'm going to say, close to 2 years, where those high net worth individuals are not only piling into precious metals and other assets like that, but they're also piling into private REITs, real estate investment trusts. So they're still seeing the opportunity of putting their capital to work. Now, part of this, without getting long-winded, which I often do around fiat currency, decoupling, devaluing of fiat currency, we're in this illusion that our assets are going up. Nothing has become more apparent than over the past 5 years, where we start to realize that yes, it looks like real estate prices are going to the moon and all the rest of it, but it really is the devalue and the devaluation and decoupling of fiat currency. Hence, we see what's going on in the gold market. But it's a statement of what's going on, a global macro, as we look at Russia and Ukraine not coming to an end anytime soon. You've got trade war between China and the US. And then on top of that, you got the US saber rattling, actually threatening Iran. And that could literally turn into a full-scale third world war. And if you want to listen to somebody else talk, some guys, by the way, some people, JG, they're going, no, we've already started a third world war. All of this is happening. So if you look at it and you go, okay, well, what do I do? Maybe the smart thing to do is nothing. But having said that, you have to look at your own financial situation and say, man, how do I get my fiat currency, my dollars to work, because they're disintegrating if they're sitting in the bank. So
in what world, in two things, Patrick. Number one is you said about 18 minutes ago that sometimes you happen to get long-winded. I've been able to cut in for 18 minutes because you've been on this tirade. I was going to call it a rant, but it's more of a tirade, that one. But let's talk about something. I want to come back to a couple of things you said, but let's talk about one thing you just said, which is for some people, the best thing to do is nothing. Can you give me an example, Patrick, where that might be right? Because they're most often, and I'm not saying that in every situation it's not right, but I'm saying 80-90% of the time, doing nothing is not typically a good thing. And I think there's a lot of people that like to sit on their hands and blame these distractions and end up doing nothing. And in 5 years, Patrick, how many people do you and I know that 10 years ago, 20 years ago, 30 years ago, 40 years ago, 50 years ago, oh man, I was going to invest in real estate. I was going to buy that condo one time. But there was this thing in the 2000s. It was called Y2K. So I didn't pull the trigger then. And then it was this other thing called the dot-com crash. And I didn't pull the trigger then. And then it was this other thing that happened in the US. And then I didn't pull the trigger then. And then it was the great financial crisis. And I didn't pull the trigger then. And they never end up pulling the trigger because they want to do nothing. So I'm pretty passionate about this. Give me an example of when it's good to do nothing. I'm not saying that doesn't exist, but it's not very often.
JG, you're living in your high net worth world, and so you have concerns. But I'm just going to point something out: is that you're an entrepreneur, you're a business owner, you read, you act, you're going to do whatever you need to do because you have the wherewithal and the view of the world that allows you to do that. So in other words, you go, okay, this isn't making money. I'll go over here and make money over here. I'll go over here and make money. I'll figure shit out because that's how you're wired. What I'm speaking to is there's a lot of individuals out there right now that literally don't know if they're going to have a job, that literally are afraid that they're going to lose half their household income because one of the spouses are going to get laid off or lose a job. So there is a time where we have to look at it and say, okay, well, real estate's a fair play. We know it's a great game to play. You get to leverage capital and all the rest of it. It becomes a liquidity issue for most. I'm not even going to say many. I'm going to say most. And that's what keeps them sitting on their hands.
I'm on board with you. Number one, you said we're going to debate this one. I love this because this is perfect. Let's get into this. This is a good topic.
I'm just going to tell you right now, you're wrong.
Yeah, we've been down that road before. But so let's talk about a couple of things. Number one, you said I'm wired that way, right? If this isn't working, I'm going to go there. If this isn't working, I'm going to go there. I'm going to try these different things. You said I'm wired that way. Number one, first and foremost, I didn't come out of the chute this way. I wired myself this way. So everyone can be wiring themselves this way. That's something they can do while standing still if they want. That's something they can do. Now, if somebody is at threat, and listen, there's a lot of people that are feeling threatened that their jobs are going to be taken or whatever the case may be. Perfect. Get off your ass and start retraining right now because it's probably going to happen. If it's not the trade war, it's going to be AI. And if it's not that, it's going to be something else. So get in a position that it's going to be good. Patrick, you and I have made moves in the last year getting ready for this stuff, and doing nothing hasn't been on the list.
No. It's actually looking for, okay, what do I got to do? Not, I'm going to do nothing. That's for sure.
So then I rest my case. Doing nothing is not a good option. And if somebody's thinking they should do nothing, I highly encourage them to call Patrick Francie. Patrick, put your phone number on the screen now. If you think you should do nothing, call Patrick and he'll tell you how that's probably not a wise idea. I really don't think doing nothing, Patrick, is a good idea for most people. They got to be doing a whole lot more because they just keep using the next thing as an excuse to do nothing. It's an epidemic, the doing nothing epidemic. You heard it here on this show first.
I don't know where the hell we're going with this conversation. So you're right. I mean, it is a case of let's reflect on this a little bit. When it comes to putting capital to work or wanting to leverage your capital, it can become a liquidity issue. In other words, it may not be smart financially to invest in anything right now for you if liquidity is an issue. In the audience that we hope to speak to and what we want to get through to people is that through the chaos, real estate investors who keep their nose to the grindstone, keep looking for deals, stay educated, stay on top of what's going on economically, look at the data in whatever region you might be investing in, you're going to see opportunities show up that you can actually take advantage of to grow and maintain your financial net worth. That's kind of it. What we know and what we're distracted by is all the freaking bad news headlines, and we don't look behind them, or we don't look into where is the opportunity within those bad news headlines. I guess really that's what I'm saying around all of this. But some people are going to have to say, no, I can't take the risk. I'm not willing to take the risk. That's a decision. That's all I'm
Sure,
saying.
but that's a different decision than doing nothing. That's very different than doing nothing. That's making an intentional decision. I agree. There's stuff that I've been wanting to do, that make decisions and investments and so on and so forth, that I've decided, no, now's not the right time. Let's just put that one on pause. Let's reevaluate that in 3 months, 6 months, 12 months, whatever the case may be. So I agree with that, Patrick. Now, listen, let me ask you this, though. I'm going to switch gears for a second. I do want to talk about interest rates. We're going to come back to interest rates in a second because bond yields are coming down, which is going to have an impact on the market, no doubt about it. But before I get there, I had a meeting, a very interesting meeting last week with a huge firm. These guys are, kind of Janet LePage style, probably as big, if not maybe a little, maybe a little
billion.
smaller.
Yep.
Yeah, a few
Billion.
billy, few Billy, So I had a meeting with them because they want to back some of the stuff we're doing at Visture, some of our coach home projects. But here's what's fascinating: they got properties in, Arizona, Texas, Florida, Wisconsin, all over the U.S. and in Canada as well. They have some, Sault Ste. Marie, and they have some in Guelph and all over the place. What's interesting though is when I had a meeting with the two top guys, and they were telling me that they were fascinated and they had no idea, right? They had no idea that there was this much cash flow opportunity in Ontario. Of all places, Patrick, would you believe it? There's cash flow opportunities in Ontario. Shit, it's almost like they've been watching this show, which, by the way, incidentally, they did tell me they watched this show. So, but yeah, they've come and they're looking at stuff and they were really surprised. And as looking at our numbers, they said, wow, there's actually some really good cash flow opportunities in Ontario because prices have come down, because interest rates, and that's where I'm going with this conversation, because interest rates are trending in the right direction. It opens up a lot of opportunities. So despite people getting concerned and people, have lots of right to be concerned and so on and so forth, where do you think interest rates go from here, Patrick? Because interest rates will lead to some interesting opportunities in the real estate market, because it is the number one cost we have as real estate investors is interest, and interest rates are heading in the right direction for us.
Well, and we know that, ultimately interest rates are influencers in the world of real estate, and they do have a high influence. I don't know where interest rates are going to go, to be honest with you. I think that bond yields are right now, they've come down a little bit, but given what's going on economically, global macro, again, even North America, as in US and Canada, I think we could see bond yields either flatten or even spike up a little bit. I think they're going to be a little volatile or continue to be volatile. So what does that mean? It means fixed rates are still going to be, I think, kind of in the low fours, high threes is where you're going to be able to get a mortgage, and you're going to have to make a decision. Will variables come down a little bit more? Bank of Canada is between a rock and a hard place, and how can you even look out 90 days and say what are they going to do? They're literally what seemingly is they're waiting to the last minute to even imply what they may or may not do. In other words, they have no clue what they're going to do because they don't.
Oh,
We can't
yeah.
we can't see what's happening. So the point of it is that I think that ultimately they're going to have no choice but to bring rates down a bit more. I think ultimately when we see April 16th, that's what's going to happen. Probably a quarter basis. Some are actually calling for half. I think that's being a little bit much. I think they're going to be more strategic in that quarter point. We'll see it come down. And so, yes, from an investor point of view, listen, that's a good cash flow move. But I think at some point, JG, I think investors, people in general, are going to have to look at locking in, because I think that.
Well, I'm glad you went there, Patrick. That's exactly what I wanted to ask you, because I think there's a moment here, and I know this is what I'm actively looking into right now. But I do think rates. I think no doubt Bank of Canada is lowering the next one, in my opinion, and probably the one after that. But my question is then when inflation kicks in, because that's what tariffs does. Tariffs kick in inflations. We know that's probably most likely going to happen. The odds are definitely that's going to happen. Then the Bank of Canada is in a really tough spot. They're not in a quite tough spot yet, but they know they're going to be in a tough spot. And they've already said their mandate is to control inflation over everything. Their mandate is not to control the economy. Their mandate is to control inflation. And I think there's no doubt they're going to raise rates. So my question to you is where do you think we end up in 3 months from now? Do you lock in while you kind of listen, if you got rates in the high threes, low fours as a real estate investor, like that's not bad. That's pretty good. Don't think it's going back to 2% here. Like that's pretty good stuff. Do you lock in or do you play the gamble? What do you think?
Well, I think first and foremost is that if you're going to go with a variable rate, that's fine. I know that I'm still waiting to make some decisions on some mortgages that I've got that are renewing over the next few months. But ultimately, here's the thing. Like, I think I don't want to say ultimately again, because it's not that. Here's the thing that we have to consider. If you're going to go variable, you better be paying attention to what's going on. You cannot kind of set it, sign the mortgage docs, and forget it, because you could definitely get caught. But I think that, to your point, is that inflation is going up. But what's going to drive inflation? And you said it yourself. Well, tariffs are going to drive inflation. Here's the thing. Interest rates are not going to impact that type of inflation. In other words, they can have the tariffs and then raise interest rates because inflation's going up, but it's not going to change the tariffs. So in other words, there's reasons to lower rates with inflation because it's driven by consumerism and it's driven by demand. Tariffs are not driving demand, they're just driving costs, which is the inflationary side of it. We look at, for example, you look at how expensive it's got to exist in this country, and we see wages going up 6%. Where do you think that 6% is going to end up? It's going to end up on the cost of things. Now, interest rates, again, are not going to bring that down. So this is where the Bank of Canada really gets into a tough spot. And here's what we haven't said, and I've talked about it many times, and that is the construction industry, particularly in Vancouver and Toronto, is only just getting started in terms of the meltdown. You're going to see unemployment go up in that construction industry for sure. They're not building anything new. They're finishing projects. It's already starting to tick up, JG, and it's only going to get worse. So it's all to say that the Bank of Canada, if they raise rates, we are then really into a stagflation environment where you've got high interest rates, a slow economy, cost of goods are have gone up significantly. This is not a good scenario that could be unfolding. So Bank of Canada is in a tough place.
A very, very tough spot. I agree with you, Patrick. And it's going to be interesting. I mean, I think as investors, we have to be pretty, heads up at this time right now, because after what we just went through with rates doing what they're doing, what they've done, and if anybody didn't have their finger on the pulse, and I think everyone, even you and even myself, Patrick, we didn't lock in as much as we should have when the rates were super low. And everyone suffers from the same thing, which is when rates are really low, they think they're going to go lower. And then on the opposite side of the curve, which we've just gone through, is when everyone thinks when they're going up, they're going to stay high forever. But that's not the way it goes. So like they're coming back down, and they're kind of in that like high threes, low fours, mid fours for an investor. That's a good rate, Patrick. If most people can make money at that rate in the rental business, it's not a bad rate. You don't have to have 2% in order to drive your rentals.
No, for sure. But here's the other side of it, JG, is that there's a lot of stuff that let's be really clear. We've talked about the condo market to nauseam, but it's also what's driving a lot of consumer sentiment, because all they're reading is the headlines about real estate being down. Listen, what's starting to really happen right now, for example, is listings are going through the roof, but sales are not. So buyers are still not coming out. What is starting to happen slowly but surely, and we've said this, again at nauseum, is invest in detached. Multifamily is yes, single family yes, but is a multi. So in other words, duplex, triplex, fourplex, if that's the game you want to play, or you get into multis, 5 units and above. The point of it is that now we're starting to see negotiations open up and opportunities open up for investors to come in and do some deals on that. Now, there's not big, huge discounts on it, and but there is a lot of motivated vendors that are now coming into the market, and this is really the opportunity. And we've said it before, and I think it's only going to continue in that vein, is that investors are going to have time to write offers, to go snooping around, find deals, write those offers, and get deals done. And that, I think, is the key to all of this, is being strategic and looking at what type of asset class in terms of real estate are you investing in. Condos, let's just pretend we don't even talk about them anymore.
It's interesting, Patrick, and I want to go to the last topic I want to touch on here before we wrap up is I want to talk about the campaign promises that are happening out there. I want to get Patrick Francey's take on the campaign promises. So I'm going to come back to that in a second. But I do want to say that when I started at the Real Estate Investment Network, and I became a member and I started learning about this. This is like about real estate in 2012, 2013. Patrick, that all of the big investors that I remember thinking like, wow, look at those guys, look how far ahead of me they are, and so on and so forth. And you were on that list, and as I watched those investors and their portfolios in 2013, 2014, 2015, 2016, you know what they all had in common? Every single one of them, and you included, buddy, every single one of them took advantage of 2008, 2009, 2010, when the times were tough. And they dug deep, and it was difficult. I'm sure you could share a ton of war stories, but you guys dug deep. You guys went all in, and I'm not saying going all in is the right thing, but I'm saying going all in, not from necessarily from an investment perspective, but going all in from a mentality perspective and getting in on that down wave, so that when you're at the bottom of the bell curve, it's time to jump in. And I remember thinking, that's the one thing they all have in common is when times were really tough, they didn't sit on their hands. They didn't do nothing. They were courageous and they took action. And I think this is one of those times, Patrick. And I think in 2030, when you're, old and gray, oh no, that's already the case. Never mind. When you have less hair than you have now, or when I have no more hair in 2030, we're going to be having this very conversation. And we're going to say, my gosh, remember, 2025, remember 2024 and the decisions. Oh, it was so difficult, but man, we're so happy we did. I mean, that's what I think the reality is.
100%. And I think that when we look at where the economy is going, we have to not ignore that our job, like we, as individuals, and I'm not talking about you and I and our job, but I'm saying is we as individuals have to look and say, how do we support our families? How do we create and sustain our financial futures? And we have to invest our capital. The worst thing in the world right now, as far as I'm concerned, is sitting on cash without a very definitive plan for it. Now, some guys look at Warren Buffett, for example, sitting on a mountain of cash. Well, he's saying, I anticipate stock market getting hammered, and I'm going to bide my time, and I'm going to go in and I'm going to go heavy. But he has a plan. For those of you who are maybe listening to this and they've got some money sitting on the side, that's fine, but make sure that you're doing it from a position of, I'm just waiting. I know what I want to do. I know what I want to achieve. I'm going to keep sniffing around. I'm going to keep networking, looking for deals, but I'm going to get my capital to work. That's the key component of all of this. You must not be just sitting on cash and thinking that I've got a savings account or a GIC at 3%, you are losing buying power by the day, and you have to get your capital to work.
All right, let's talk politics, Patrick. I got to find out. I've been seeing, all the promises that are being made. I want to touch on a couple of them, but well, what's stood out to you so far? Any good promises? Any glaringly bad promises? I'm fascinated by the fact that Carney takes off the carbon tax, and everyone's like, "Oh, this is so great! There's no more carbon tax on fuel. This is fantastic." I'm like, "Who the hell put the carbon tax there to start with, people?" Like, you know.
And how many and how much gas has gone up, for example, and now it'll come back down to where it was. It went up, anyways. That's a different. It's like they priced it high, now they bring it back. It's again, it's all a setup. Here's the thing about it, JG, is that when we look at Carney as a PM, unelected, drives me crazy that he's making these decisions. He announces a housing plan. Like, okay, the government needs to get into the business of building housing. I don't know the exact quote, but it's something along that line. And I go,
Did it include deregulation, Patrick? Did it include deregulation in any way, shape, or form?
They
And
didn't.
it's a shitty
Nobody
plan.
said we're going to drop back, 30% of the charges that come to building a property, particularly in Ontario and British Columbia. It's all, anyways. It's all politics. Carney saying that the government's going to get in is like Trudeau. We're going to build houses. No, they're not. This will never come to fruition. It can't happen. It won't happen. It's absolutely an overblown statement. Yet he's standing by it, which just. Anyways, all of the things that make me a little bit nuts, that people do not see through what is happening. I think we'll go to the polls or go to to election. I think ultimately Liberals are going to lose. If you listen to the polls, they might win. But when you look at what's really going on in the world, Polyev is packing stadiums, with thousands of people, and Carney's.
Gosh, but it's
Carney packed a pub.
It, it's amazing though, Patrick, when you look, and luckily we have, YouTube and X and social media to be able to see the truth. But if you consider just what the pollsters are saying and just the media is saying, I mean, it's amazing how they are doing exactly what happened in the US and just like leaning heavy on the Liberal side, just trying to influence that with everything they have. It's kind of fascinating to watch from my perspective. It's unfortunate, but it's fascinating nonetheless. Two questions then. What do you think? So if that's the crap that the Liberals are doing, and I agree, and everyone, I mean, anyways, I don't want to get into it too much because I get a little bit wound up, especially nowadays. I know usually you get wound up, Patrick. Right now, I'm getting wound up with all this stuff. But let's talk about two things that I thought was quite interesting. What do you think about the Polyev policies of the TFSA top up? I'm not sure if you're familiar with it, and his capital gains concept.
Those
quite fascinating.
But see, that's exactly what needs to be done. Okay,
I agree, 100%.
That is a huge policy change. Like, if I would vote for him just for that reason. I mean, I'm a big fan of Polyev, anyways. Although I have my own, kind of concerns about politics in general. But ultimately, if he gets elected and he comes through with that, which is to say, you won't be charged a capital gain, or you won't pay a capital gain if you take that gain and reinvest into another
Canadian business.
Yeah, another Canadian.
But at the end, when you do cash out and don't reinvest, you'll pay your capital gains at that point. So there's a couple of things to clarify here for anyone who's watching and who doesn't understand these policies. Number one, the thing that drives me the most crazy, Patrick, is people say, "Oh, this is just going to help the rich people," and I think this is 100% absolute bullshit, because the end of the day, these capital gains, you and I, Patrick, make decisions every single day that could benefit everyone around us by deciding to sell or not to sell assets for a variety of reasons. Capital gains tax has a big effect on that. And we would choose things differently and employ more people and create more economic prosperity for everyone around us. And we're small little players, Patrick, but the fact is everybody can win with these kinds of things. This does not just benefit rich people. In fact, this has more benefits for everyone around us than anybody else. And I think that's fascinating. And a lot of people don't understand this stuff.
Yeah, 100%. And we have to pay attention to what's going on and listen to the policies rather than the politics. And this is where, we have to, and it's hard because you have to differentiate between politicking and actual policies that make sense and then agree with those policies. And most people don't. They're voting for, because, back in the day it was Trudeau is so good looking, like I'm seriously, I think we need a test. That's what it is. I think before you're allowed to vote, you need to be tested.
I
Like, do you,
like that.
like it's anyways, long story short is that we have to get through this election. We then have to wait for the government to change over. 2025 is going to be and continue to be herky jerky. From a real estate point of view, we know there's opportunities out there. You have to think regionally, you have to think asset type, and then also pay attention to one of the things that's happening in Canada right now is the slowdown in immigration, cutback in non-permanent residents. We're still going to have a very strong immigration, and that's something to shine a light on, JG, is that population growth will still be relatively strong in that 350 to 450,000 people, not the 1.3 million a year that it was. So it's all to say that immigration is in fact slowing down. That's going to have an impact. And we have to pay attention to that as investors, who are and what is our tenant profile, and knowing that immigration is slowing down.
I've been dealing with this firsthand, Patrick, because this is one of the things that I've been quite vocal about is when they reduce the incoming population, the immigrants. One of the major sectors that took the biggest hit was the student population that was coming in just free flow and free for all. And remember, Patrick, I said anyone with a student rental, this is those times where it gets more difficult. So that student rental that's not that great, kind of in a crappy location. It takes 14 buses to get there. You're trying to jam 18 people in the same house, that kind of stuff. Those are those rentals that are suffering right now. And I'm seeing it firsthand. And people invested a whack load of dough into their rentals to add bedrooms and so on and so forth. And now they're all empty. The reason? The student population is not there like it was just 12 months ago. So, this is something, again, Patrick, that, you got to have. You got to have a long-term vision, and now you're going to have a very difficult decision to make for some of these people with student rentals. Is do you switch it to a long-term rental because the rental demand for long-term rentals is still really, really, really good. Rates are fantastic, rents are fantastic, everything's fantastic on that. What do you do if you own a student rental with 18 bedrooms? Do you convert it into 2 or 3 apartments? Do you put that money into it? That's a decision people have to make right now.
Yeah, many took on and they pivoted into that. And sometimes they pivoted into that because at the time that was the only option or the best option. It's like right now with what's happening in British Columbia with the short-term rentals being shut down and then EB firing it or threatening to fire it back up again. I don't know what the status of it is right now. But the point of it is that things are always changing. We have to stay engaged in what's happening and then strategically make decisions based on that.
Oh, it's an exciting time, Patrick. It's so exciting, in fact, that I'm going to put my work hat back on. I'm going to keep cleaning up the ice storm because that shit show's not over yet.
Well, so JG, you've been busy cleaning up your ice storm. I went through that in the Fraser Valley a number of years ago, and you're pretty distracted. So you're not on social media, you're not on X, you're not on all of the stuff that's going on. Has life shut down? Like, are you feeling like really out of the loop and depressed because you don't know what's going on?
It's so funny. I thought about this last night, Patrick. I got home at it was probably about 8 p.m. by the time I got home after a long day of cleaning up and all that stuff. And I got home and it was super. I made myself, I have no power. So I made myself a cup of soup because that's all I can muster up. I had options, but I wanted just a nice cup of soup. I was cold. I made a cup of soup. I sat by the nice fireplace by my wood stove. And I thought to myself, this is amazing. Like, this is so peaceful. My mind is so at peace right now because I don't have all that other crap in there from YouTube and social media and all that other stuff. So I would say, Patrick, if I had to describe what it feels like, peaceful is actually the word that comes to mind. And that's a good thing.
There you go. So maybe instead of doing intermittent social media fasting. So, 1 day a week, no social media. There you go.
Oh, no, dude. That's crazy. If anybody was going to do that, they should only go on social 1 day a week and take 6 days off. The world doesn't move that fast. So you have to be on there 18 times a day. It's freaking ridiculous.
Want to find out more about what's going on in the world of real estate? We've got a number of live events coming up with the Real Estate Investment Network in collaboration with Alfonso Quadra with Wealth Genius. Go to raincanada.com, check out our events calendar, live events for you to attend, network, and find out what's really going on in the real estate world. Look forward to meeting you there.